The purpose of Wealth Talk is to educate, inform, and hopefully entertain you on the subject of building your wealth. Wealth Builders recommends you should always take independent financial, tax, or legal advice before making any decisions around your finances.
Welcome to episode 40 of Wealth Talk. My name's Christian Rodwell, and I'm joined by Mr. Kevin Whelan, founder. Hi, Kevin.
Good morning, Christian, and nice to talk to you today on the day we got the announcement, of course, that we're now set for 5 years of Conservative government, which is going to be at least some clarity around what we're going to be doing in this country, which hopefully clarity will give more certainty for business people to think about how they're going to move forward in the next 5 years. And as we're still in the business pillar, it's interesting to see what we've got lined up.
It is indeed. So today we're really looking at the area of sales and marketing and 5 ways to increase your business profits.
Well, that all sounds like a nice teaser, doesn't it? Because in the end, everything about a business, one of the things important that most people will know, they'll be able to measure it, even if, as I think Chris will say, often business owners measure the profit at the end of the year when their accountant tells them the profit. But either way, that profit gets measured. And as we discovered from the metrics last time when we spoke with Richard on the Value Builder score, profit and the EBITDA, or profit is another word for that, is one of the most important measures when you're coming to sell your business. So, anything that can drive more profit is a brilliant thing to do. And Chris is going to describe different ways you can do that, and each different metric, each different method by which you can do that can compound upon itself. And that's the magic of this. So it's not just about learning some things that you do and somehow you get profit. It's the compounding effect of one upon another, upon another, upon another. And that's leverage in action. And I think that's why it's brilliant.
It is indeed. And back in episode 33, we actually did an entire episode titled You Can't Be Wealthy Without Leverage. So it's definitely, today's episode is looking at how to get more leverage from your marketing. And we understand, Kevin, don't we, that using your Wealth Dynamics profile as an example, some people will be more inclined to track and measure the data and the figures than others. And it's important to recognize, isn't it, if your strengths lie in certain areas more than others, that you may need to team up with others, or certainly have others in your entrepreneurial network that can maybe help you analyze and get the best out of this data.
Well, that's unquestionably true. And when we heard from Penny Power last week, she was talking about business is personal. And it's not just personal as in, you need to really focus on personalizing the relationship and the experience of the customer. And that's definitely one of the big trends that's upcoming, isn't it? The way that most people get overwhelmed or the market gets homogenized. So there's so much choice. There's now businesses really focusing on personalizing things. But it's not just that. I think I said in the last podcast, Chris, that when many people go into business, they go into business really to do the work that they're already trained and know how to do. And often if they make the transition, as Chris did, he was a banker working for a big bank, and now he's in business himself, and now I think with his SaaS, he is a bank. And might just add that Chris has worked with us now for 6 years. He's now completely financially independent and doesn't need to do the coaching. But I think you can tell when you listen to Chris, he's got a real passion for the subject and a real passion to help business owners create wealth, because he recognizes, as he says, in fact, that so many people just don't measure these things. So whether you do it yourself, or you love to sell, or you love to create, many entrepreneurs like to do that, then it's got to be the right thing to do to get that measurement being done by somebody. And it doesn't have to be somebody who's on your executive board. It could be a bookkeeper. It could be someone who's just got a wealth dynamic a little bit more steely, in other words, more into the detail than you. So I would definitely encourage anybody who's in business to have somebody providing the numbers more quickly than just waiting for your accountant to tell you what they are at the end of the year. And you either wish it were better, or you think, well, how can I change things? Well, it's too late, because you're looking backwards instead of looking forwards.
That's right. Now, Chris is going to walk us through the 5 ways, and it's a little bit technical. If you're listening right now and you're a visual person, then don't worry, because we've got a download for you. So if you head to the show notes, then you'll find the link, and Chris has supplied a document. So download that, and then you can listen back to the podcast and start filling out some of those numbers, or at least be sure about which numbers you need to be monitoring in your business. So shall we have a listen to the interview with Chris?
Looking forward to it.
Chris, welcome back to WealthTalk.
Nice to see you again, Christian.
Yes.
Thanks for inviting me back. I really appreciate that.
Our listeners who will remember, I'm sure, back in episode 18 when you were a guest and we were talking about SSAS pensions in that episode. And actually it ties in with what we're talking about today, because the SSAS pension actually allowed you to get into business that you're in today, didn't it, Chris?
Certainly does. I'm a massive fan of SSAS pensions. It's been a game changer for us. I think the link with today is that the SSAS pension allowed us to invest in a franchise. Interesting that you can use your pension money to invest in a franchise. It's an intangible asset, but it can be done with a low back. So we bought the franchise for Action Coach, which I'm heavily involved in using the SSAS, and a very tax efficient way to do it, and a very cash efficient way of doing it.
Indeed. Now, a couple of weeks ago, we had Richard Perry, who's a fellow WealthBuilders member, also an action coach. And Richard was talking us through the 8 drivers, the value builder system there. And today we're looking at another way for business owners really to get a grip on the figures and the important things that matter in their business. Would you like to explain a little bit more about that, Chris?
Yeah, I'm going to give some context first, Christian, I think, around marketing. And it's interesting because as an accountant, having come from a bank, accountants generally have a different view of marketing. And the tool I'm going to share with you is very much a tool for making the best of your marketing. So I think just a few observations before we step into it. As an accountant, we were always taught that marketing was an expense, not an investment. And if I think about my time at the bank, the marketing budget was the first one to go. That was the first one to go when there was a cost-cutting exercise, very short-term view. But my view now, and I think if it's handled well, is that marketing has to be an investment, and is an investment if it's handled properly. So I think that's the first concept to get across. If it's measured, if it's handled well, marketing is an investment, not an expense. I think the other thing that's important is, and I'll talk a lot about this, is measuring. Again, I'm an accountant, so I do like numbers, but my experience is that a lot of clients don't measure enough in their business, not even their profit. Often we'll talk to a prospect or a client and ask them what their turnover is or what the profit is, and it's a number they find out at the end of the year. So it really is important that we start measuring things in the business. And what I'm going to talk about today is a tool that's going to lift the bonnet on some of the metrics in the business. And then you can start to play tunes on them. So measuring is another key important part of the message of this session. The other thing for me is that marketing, what we're in business of is actually acquiring customers. We're actually buying customers. And Brad Sugars, who's, I suppose, our mentor, our coach, an action coach, has written a book on that, buying customers. What we're doing is we're actually spending money to acquire customers. But again, to do that, you've got to know your numbers. You've got to know how much it costs you to acquire a customer. So you spend £1,000 on a marketing campaign, you get 10 customers, your acquisition cost is £100. That's an important number because you need to benchmark that against the return you're getting back from the customer. And again, the metric there is lifetime value. How much does a customer generate for you in their lifetime in terms of revenue and profit? And then you can benchmark the cost against their lifetime value. So there's a few concepts that underpin marketing that I think are just worth kind of reinforcing before we step into 5 ways. Okay. So if I just go into 5 ways, this is probably the most valuable. I've been with Action Coach for six and a half years now. It's the one tool that we share with our clients that just completely blows the mind. And as I say, what it's doing is lifting the bonnet on some of the numbers. Now, my experience is that most clients will generally know or have a view on 3 key numbers in the business. They'll have a view on how many customers they've got. Not always, but they can have a reasonable guess how many customers they've got. They'll generally know their revenue, and they'll generally know their profit. They're the 3 numbers that they know. And if we ask them the question, they can at least have a guess at what those numbers might be. So often the case that they don't know their numbers, but generally they'll have a guess at it. So they're key numbers. And I think, Christian, we're going to attach some documentation to this session, which will help you calculate your own numbers. But the customers, the revenue, and the profit They're outcomes. They're not numbers that you can easily influence. And the idea of what we call the 5 ways is there are 5 levers you can pull or you can play tunes on that can influence those numbers. So let's just start with customers. Where do we start? How do we get customers? We get customers by marketing and by generating leads. So at the top of the hopper in a business, if you like, is lead generation. We're acquiring leads. And for me, a lead is somebody who's expressed an interest in your product or your service, or somebody who's made contact with you, as opposed to a prospect who's somebody that you may want to do business with, but they haven't at this particular point made contact. So let's get the definition of a lead. There are various definitions, but that's one worth hanging our hat on. Somebody who's made contact, somebody who's registered in your website, somebody who's been to one of your seminars, somebody who's kind of interacted with you. Again, we've got to start measuring that number either on a weekly basis or on a monthly basis. Often clients don't measure. They haven't a clue how many leads they're getting. They don't know where the leads are coming from. So again, the more granularity we've got around the leads number, the better. But suffice it to say, let's start measuring that at a high level. And again, I would encourage anybody listening to this, let's start measuring the leads, okay? So leads at the top of the process, okay? And there are the important thing here is there are various ways of attracting leads, and I'm not going to go into all the strategies, but for example, as coaches, we use seminars as a way of generating leads. We'll give value in a seminar, attract people into the seminar. That's an opportunity for us to kind of capture information on the people in the room, and they are leads for us as business coaches. So various ways of doing that. Another way you can do it are using alliances. So look for an organisation that has got a similar customer base to you. I mean, again, as coaches, accountants are quite good for us to have an alliance with. An alliance is where we're working together. We're not competing in terms of the products that we offer. What we're doing is we're providing a service to a group of customers, and we can kind of collaborate with accountants and work with them on seminars or generating kind of business that's of mutual benefit to our clients and to us as collaborating parties. So let's leads. Let's get them measured. Let's understand where they're coming from. Great question for a customer when they ring up or when you speak to them. It's important to know how did you find out about us. Then you start to get an indication about which parts of your marketing is working. All right, so we've got the leads, and the next part of the calculation, the next part of the 5 ways is conversion. Okay, so how many of these leads are we converting into customers? Again, quite interesting when you ask a prospect or a client, what's your conversion rate? Often, I don't know what you know by conversion rate, but I'll have a guess at it. They'll have a guess at it, and invariably, their guess is massively out. Once you start to test it, they over exaggerate their conversion rate. So the conversion rate is how many customers have we converted from leads? Sorry, how many prospect leads have we converted into customers? So we've got 100 leads, 25 convert to customers, conversion rate 25%. A really important number. And anything as low as kind of 20, 25%, depending on the industry, gives us the opportunity as coaches to start to do some work with the clients to move that number up. Okay, so there's no point generating leads and losing them. Let's get them converted into customers. Various ways of improving conversion. Again, I think, Christian, we've got a roadmap that's going to give some more strategies. But one of the most uncomfortable ways of improving your conversion rate is by listening to the sales calls. Very, very uncomfortable as a coach to have somebody listen to your sales calls. And it's a discipline worth having, I think. So any business that's in sales, let's start listening to the calls. Let's start recording them, and let's start benchmarking those that are good at conversions, those that have got a high conversion rate, those that are not so good, and then we can get best practice into play in the business. Again, sales scripts. That's another great way of improving conversion rate, rather than just having a kind of free format conversation. So conversion rate is an important number. So having got leads and having got conversion rates, we've got to a base level number of customers. Okay. Obviously, customers generate revenue. So the next part of the 5 ways is to get to revenue. So the 2 elements that we're looking at here are what's the average sale? What's the average amount that a customer pays you on each transaction? Again, often a number not measured or not known by clients. Once we know it, we can start to improve it. Again, various ways of doing that. One of the first questions we ask our clients is, when was the last time you put your prices up? And often they haven't. For quite a number of years, because they don't like doing it, because they're worried about losing customers. But it's their costs are going up, so let's really challenge whether we should be putting our prices up. Okay. Another interesting way of looking at the average transaction value, and McDonald's do it really well. It's a well-quoted example, is cross-sell or upsell.
Mm-hmm.
Do you want fries with it? It's the classic example. And, what's the equivalent in your business of the McDonald's? Do you want fries with it? A really great tool, if people want to just map this out in the mind or draw it out as you're listening to this, is draw out a matrix with, at the top, your products, product 1, 2, 3, 4, 5, and then down the left-hand side of the matrix, the customers or your key customers, and then cross off where each customer has got the relevant product. Okay, I don't know whether that makes sense, but you're starting to get a roadmap of which of your customers have not got products that you could potentially sell to them. Okay, so again, by being aware of that, when you're having a conversation with them, you can start to move them through and increase the average sales value just by saying, "Do you realise we've got this?" and you've not engaged with that particular product. So really useful tool. It's a roadmap that will kind of serve you well in your business. Okay, so average sales value. There's loads of ways of increasing it. But it's a key part of getting to revenue. And then we're into, so how many times do your customers do business with you? Numbers of transactions. Again, best example here is, or one example is restaurants. If somebody comes to a restaurant for a meal, you want them to come back. Okay, so we should be measuring how many times do customers come back, repeat business. It's an important metric. It's one that needs to be measured. Not always easy to capture, but it's one that we do need to capture and encourage them to come back. If they're not coming back, there's a problem with either food or the service. So it's telling you a story about your business. I love the example of the florist who sends an invite to the husband. Sends a reminder to the husband that it's his anniversary in a week's time. How amazing is that? I could really use that myself, I must admit. But that's clever. They've got a database of customers. They're interacting with the customers. And again, a key part of this is, have you got a database? Have you got information on your customers? Then you can start to interact with them. But simple examples there that work well. So having got numbers of customers, having got the average sales value, having got the numbers of transactions that we're seeing from our customers, we can start to kind of use the maths to get to revenue. So we're on the first line of the profit and loss account. Just merely by knowing that, you can start to play tunes on the metrics. And then the final piece is, having got revenue, what's our margin? And that can be either gross margin or net margin. It depends what you want to monitor. But whatever the margin is, it needs to be measured and captured. And again, incredible how many businesses don't necessarily know their margins. Really useful to know which products generate which, the proportion of your profit. The old 80-20 rule often features. Often it's 80% of the profit comes from 20% of the customers. You should know those customers. You should know those 20% that are giving you the best profit, and then you can start to kind of drive the growth up in your business. Okay, so margins, again, many strategies to impact on margins. Certainly measuring it is a start. And what I find is it's interesting how just by measuring it, the numbers improve. It's incredible. Quite odd that, isn't it? How just by measuring, because it's in your line of sight. But just measuring some of this stuff will make a big impact. Certainly looking at costs. I mean, one of the first things we would do with a client is give them the 10% cost challenge. Go and speak to your accountant or your bookkeeper and get them to tell you how they can shave 10% off the cost base. Then you start to kind of look at opportunities to reduce the costs and therefore improve the margin. Just while we're on margins, again, it's interesting how people don't appreciate the impact of increasing prices or reducing prices and discounting. Certainly for us, discounting is a dirty word. If you've got a 10% profit margin and you're taking 5% off your prices, what's happening to your profit? It's halving. Again, just hang on to the concept of that, because what that means is you've got to do another kind of slice of work to actually recover the kind of profit margin. You've got to, and it's an important metric to understand that. By the same token, increasing by 5% has a massive impact on your bottom line profit. So knowing the numbers, and the 5 ways is all about knowing the numbers. Okay, so having got the kind of base level, then it's what are you going to do to move the numbers forward. And one of the things that is worth doing is just have a look at what the impact of a 10% increase might be on each of the 5 drivers I've just described to you. So a 10% increase in leads, conversion, average fee, transaction value, and margin. The effect of that and the maths of that, because of the compounding, is that if you're increasing each by 10%, the bottom line impact is, it's not 10%, which most people would think it's not, because there's a compounding impact of the 10%, 64%. So just by seeing those numbers, you can start to see the power of this. This is leverage at its best. Divide to multiply, breaking things down and working on the component parts. And that's 5 ways.
That is fantastic. Thank you so much for sharing that, Chris. And as you mentioned earlier on there, you have created a document which we're going to link to in the show notes for anyone listening to download, and they can go through and list where your current number of leads, conversion rates, number of customers, all of the current figures, and then, as you say, work out what that 10% increase is. So I'll link to that in the show notes. And if anyone would like to get in touch with you, to ask any more questions, what would be the best way for them to do that, Chris?
I've got a website which is chrishenry@actioncoach.co.uk. So that's my website. Or my mobile number is absolutely fine. I don't mind giving that out. If you want me to shout it out, Christian, yeah.
Well, I can share that. Yeah,
it's fine. Okay. Either way, obviously there are other coaches in the group as well. So we all work as a team. So. I think that's just important to be mindful of as well, I think. Yeah.
Excellent. Well, Chris, thank you so much for sharing that with us today.
No problem. Anytime, Christine. Good to see you.
Okay, so Chris took us through the 5 ways there, Kevin. And just to recap, we had lead generation, conversion rate, number of transactions, average sale, and then margins.
Yeah, fantastic, isn't it, really, to see that the principles, the same ways we've got wealth building principles, the 7 pillars, the wheel of wealth, and all the other ingredients in the whole wealth building processes. I suppose what made me think when I saw this this process explained by Chris, that it's a beautiful, beautiful, elegant way to frame the science of the numbers and the artistry of how you improve things. So, when he talked about those things, what was really a big piece of realization for me, I think he said it in his story, Chris, is I'll try and put my teeth in, shall I? What gets measured gets improved, right? So if it gets measured, it improves. So it's critical for somebody to do the measuring, and it doesn't have to be you. So that's important. Now, you'll know in my business, Chris, I've got a full-time person who runs all the money. I've got a part-time FD and a part-time bookkeeper. So 3 people who keep me informed of the money that's going on in the business. And it's not because it's a money-grabbing business. Of course it isn't. We're measuring the value, but the byproduct of the value we bring to our Wealth Builder customers is the fact that we generate profits. And you and I talk about these metrics all the time. And it's obvious to me that when you work with people and you talk about improving, the leverage comes into play in a magical way. So, for example, Chris, he talked about, I think you picked it up as well, that if you improve all of those metrics, by 10%. So let's have a chat. Do you think, and this would be a rhetorical question for a business owner, do you think if you sat down with somebody qualified, an action coach, for example, like Chris, or yourself and your team, if you really looked at it and you took a day, could you find a way to improve your lead flow by 10%?
Yeah, without question.
No doubt about it. And probably more than that. We're talking about doubling our lead flow for 2020, right? So, if we can get 100% increase, and we know we can, then, we're now in 79 countries, Chris?
Well, actually, now you mention it, this is the last episode that we'll be doing of this year. So, we are now downloading over 25,000 episodes downloaded across 79 countries. So, a time to reflect as well and say thank you. Yeah.
So that's brilliant. But we didn't have the podcast in 2018. So the podcast came out in 2019. And we're now growing that. So that's just one measure. That's just one thing we've done that will massively improve the flow. If you sat down, and as we will do in January, and we go through, which we know our conversion rates, but if we sat down, or you sat down as a business owner, and you looked at 3, 4, 5 ways that you could use to improve your conversion rate. And Chris mentioned a few of them, but there's dozens and dozens and dozens. Would it be possible, with a bit of effort, to get a 10? Right. So you know where I'm going with this, Chris, right? So I won't go through each one, but a small, almost a marginal thing of 10% on each of the different metrics. And say for me, having somebody in the business doing the numbers, one of the things they've done is massively reduced our phone costs. They've massively reduced our computer and tech costs. They've massively reduced a number of things, business rates that I wouldn't have the time and attention to be able to do. I'd be bored rigid doing them and probably would therefore just waste money. So having somebody doing that in a business, and in a small business, you could be a bookkeeper doing 1 day a week, or 1 day a month even. Anyway, the point being, a marginal improvement of 10% focused 1 day, you could do that for the end of 2019 or the beginning of 2020, will lead by the mechanism of leverage and compounding, would lead to an increase in profit of not 10%, as Chris says, but 60%. And there's a calculator, we've got access to the calculator, that would show that to be true. But, you can do that calculation if you wanted to for yourself and see that if you're making £100,000 in profit, 1 day's worth of work to change those makes you 160. If you're making £1 million in profit, 1 day thinking, changing and measuring those would make 1,600,000 profit. Now, if you think then we're talking about businesses being valued, Chris, if your business is worth £1 million in profit and you sell that for, X times, and if suddenly by doing a few things, your business is almost worth is getting 1.6, and you apply the same multiple to that, you're getting a multiple on the multiple.
It's that compound effect. Yeah,
you're getting somebody else is seeing that you're improving that, so they might even go, well, hang on a minute. If an acquirer might come in and say, well, with our skill, we could improve these metrics by 20%. And then they're putting a value on the business themselves way, way more than EBITDA. So that's why I say, the business valuation process is critical to all of this. So what Chris is saying makes absolute sense. And I would encourage anybody to reach out to Action Coach. They have a lot of group coaching sessions. You can go along for a few £100 and you can work with other people. So you don't have to worry about one-to-one if you're at the beginning of your business life. But having somebody to help you, whether it's a coach, a professional, or working with us at Wealth Builders, get somebody or even a buddy, to talk things through who's got a different wealth dynamic to you. And I think we talked on another episode, Chris, didn't we, about the 1, 2, 3 model of working out how to have all the wealth dynamics represented in your business?
Yeah, that's right, to get the balance across all of the sides of the wealth dynamics square, indeed.
Is that an episode you can refer to?
Yeah, I'll put a link to that in the show notes. And also, I'd like to point people back to episode 38, which was where we had Richard Perry talking about the 8 drivers of business value. So if you combine those drivers with the 5 ways that we've talked about today, I mean,
wow,
you almost cannot fail to improve your business.
It's exactly. I mean, which is why I love business. I keep saying this. Why I love business is this compounding is huge in business in a way that you just can't do in any other asset. But anyway, enough of that. But I think one of the key things then, just to reflect on, Chris, and strangely, even though it's early December, I hadn't actually realized this was the last podcast of the year. So I think probably if I think on the hoof here, I'd like to do 2 things, Chris, here, if you don't mind. Sorry to announce them to you.
Okay.
You don't know where I'm going with this, right? So I'm going to do 2 things. I'm going to do a carrot and a stick. Okay. So I'd like as the stick for you to have a think about, we're coming to the end of a decade. It's the end of 2019. I want you to think about where your wealth was 10 years ago. So as we reach 2010, just when Woolies was closing, when Facebook was still at Harvard University, when these things hadn't even really been given birth yet, what was your wealth position? The world has massively accelerated in 10 years. Has your wealth done so? And if it hasn't, please think about what you're going to do in the next 10 years. Because the speed of growth in the world, the speed of how things are going to pick up. Look, the biggest room provider in the world now is Airbnb, and they don't own anything. So the whole industry and the whole world of providing wealth has got to shift, and it is shifting. And it's really important that you start thinking about different ways that you can add value in the world and how you can respond to these things. So anyway, have a look at what you did 10 years ago, see where your wealth was, see where it is now. Are you thrilled? Are you disappointed? Okay, whatever your feeling is, do something different and commit to doing something in any of the pillars to build your wealth moving forward. And Chris says, what gets measured gets improved. And Chris, we've created a brilliant new wall chart, haven't we, to allow people to record what's their current level of asset income and then what activities are they putting into their plan every month, because never let 30 days go by without doing something to build your wealth. So you can record those things. So you've got a visual that you can put in your study, in your bedroom, wherever you like to do these things. And you can keep a record for yourself of the activities you're doing. So we've done that now for our foundation members, and we've issued those now, I think. So it'd be great to put a link to that. So if people are interested in maybe using that, Chris, it's something we can make available to people, right?
Yeah, we can indeed. It's actually called the Wealth Chart, and it's a 12-month A1 wall planner. So something you physically put on your wall, and it's got our 7 steps to wealth process on there. And if you're a foundation member, don't worry, you will have a copy of this on its way to you if it hasn't yet arrived. But we do have some extra copies. So yeah, why don't we put these up for anyone listening to the podcast, Kevin, who would like to purchase a copy. And if you head to wealthbuilders.co.uk/wealth chart, I can upload them there.
Okay, cool. But let me give something free worth more than a wall chart. You know, Chris, that one of my biggest bugbears is the vast majority of people, if they look over the last 10 years, where their wealth has been for the most part will have been somewhere in their pension. And we know that Chris, who contributed so brilliantly today, did a SAS. He's completely changed his life. He's changed his world 180 degrees. He's now wealthier than he could have been with his old pension, and years and years and years before the age at which he would have been entitled to get it. However, for anybody listening on the podcast, in January and in January only, not a Black Friday deal, just something I want to offer is anybody who would like to ruthlessly analyze what's happened inside their pension over the last 10 years, what your charges have been, what your performance has been, what your risks have been, the CPR, Chris. We want to have everybody breathe new life into that. And we will do that. I've got it probably limited to maybe 500 people, Chris. I don't think we could do any more than that because my team will go absolutely ape on me. And my bookkeeper and my financial controller will be going, what? You're giving 500 CPRs for free, which we normally charge 125 quid for? Well, look, I will do that. It might take a few months. So over the offer will be in January. We'll do the work over the first 90 days to do that work for anybody who's got some kind of a personal type pension, with an insurance company in the UK, so that we can show you how you can dramatically reduce your cost, improve your performance, minimize your risks, so that if your last 10 years has been about how your pension's done or not done, now it's only 10 years since the recession, so everybody should have been doing better, but another recession will come at some point. So putting your pension in a place where you can remove the handbrake of high fees, and the world is going that way now, and I'll be willing to show people how to do that. So the first 500 people who replied, don't put it off. If you've got a pension, do not put this off. Make it your January challenge.